Now we're ready for transaction F. On May 15th, the company paid salaries expense, $1,850. So what are the two accounts that are affected? Well, they tell you one of them, salaries expense. In the future, the transaction description would probably say paid salaries, and then it's your job to figure out that it's salaries expense. So we know one of the accounts is salaries expense. What's the other one? Well, it says paid, so that means our cash is going down. But let's start with salaries expense. And what category does salaries expense belong to? Obviously, it's an expense. Step 3, is the account increasing or decreasing? Do we have more salaries expense or less salaries expense? It's increasing. And then we need to get out our accounting grid and look to see if that's a debit or a credit if an expense is increasing. Notice expenses increase on the debit side. Then we need to find out what the other account was, and we said the other account was cash because we paid the salaries expense and we pay in cash, which remember is our checking account. We actually don't physically pay in cash, we pay with a check. But we call the checking account the cash account. Anyway, what category is the cash account? It's an asset. And is our cash increasing or decreasing when we pay salaries? It's decreasing. So check your accounting grid. Is that a debit or a credit if cash decreases? That's a credit. Then we need to get out our journal paper. Remember to skip a line in between journal transactions, otherwise that's a deduction. So the first thing we do when we record our journal entries, we need the date, May 15th. Then we list the debit account, salaries expense, $1,850. And the other account was cash going down. We indent it a little bit. And then we have some sort of explanation, paid salaries or paid salaries expense. Now we need to post this information to our T accounts, which is the ledger. So we have account balances at our disposal, such as the amount of cash. So here's our journal entry, and we always post the debit first. So I'm going to increase salaries expense, $1,850, transaction F, and then I need to make cash go down by $1,850, transaction F. And then double check. Do we have a debit and a credit? Well, our debit is over in salaries expense and our credit is over in cash.